A lot of you have been asking me lately if COVID-19 is anything like the Great Depression or the recession from the financial crisis back in 2008. That's what we're going to be talking about today in this episode of the Smart Money Show. Welcome back, and thanks for tuning in to another episode of the Smart Money Show. I'm your host, Stephen Rochelle, and today we're talking about COVID-19. Is it anything like the Great Depression or the financial crisis? Is it going to cause another recession or depression? So look, let's dive right into that. First thing we need to do is define what is an economic depression. Well, it's a prolonged period, usually several years, of a downturn in economic activity. It's usually marked by a drop of GDP or a drop in GDP of at least 10%. And that's classically what you define a depression as, but you haven't seen one of those since really the 1920s and 1930s here in the US. The last time was the Great Depression. That started, or it was led by a huge expansion, the Roaring 20s, and that led to people getting excited, wanting to invest their money. They actually took really risky bets. So using margin, they actually invested all of their savings. Don't do that, by the way. We always talk about on this show having the right amount of cash reserves. Clearly, that's risky behavior. But then employment and demand started dropping. People were panic selling all sorts of assets, including stocks and bonds and everything in the market. That was the original Black Thursday and Black Tuesday. Back in October of 1929, people got into trouble and in debt. And an important distinction here in the Depression was back then, the government didn't believe that they should intervene at all in the economy. So right back then, the government didn't think it was their place to help the American consumer, help the American economy, or support jobs. And frankly, the government didn't have the same fiscal and monetary tools as they do today. So let's look at a more recent recession and financial crisis that we had, right? What led up to that was deregulation in banking and financial services. There was a big boom in real estate, so tons of people were investing and speculating in real estate. There was borrowing at a massive, massive scale for real estate. And then all of a sudden, the Fed raised interest rates. At this time, the home supply was already really high, and demand was going down even lower. So high supply, low demand, economics 101, that is not a good formula. People couldn't afford to make these payments. They defaulted or started to default. That affected all types of real estate investments. People lost faith in the financial system. And again, you started to see a lot of panic selling, a lot of irrational behavior. So one clear similarity to me between the Depression, the Recession, and COVID-19 is panic selling, right? In the Depression and the Recession, you saw panic selling. Right now, the last few weeks with COVID-19, you're seeing panic selling of all sorts of different financial assets. That in itself is similar, but I think that can be attributed to just human behavior, right? When we're scared, when we're panicking, when we react to things and think too quickly, humans tend to make really irrational decisions. You've probably seen a lot of those stories in the news about people hoarding all sorts of supplies, and one of the biggest ones was toilet paper. Now, I don't know about you, but for me, toilet paper isn't really at the top of my COVID-19 survival list. Just saying. But clearly, there is panic selling across all these market events, and that is similar, and it's something that we should pay attention to and heed the lesson too. Another big similarity is demand, and I think this one's probably the most important. Demand in the Depression and demand in the Recession were both really low, and we're seeing demand right now is being held low as well. But there's a key difference. The difference being in the Depression and the Recession, consumers didn't have an appetite for demand because they were in distress. They were in so much debt. They didn't really believe in the financial system in the first place. They weren't buying things. They didn't want to buy things. So demand was naturally low, and that's not a good situation for the economy. What we're dealing with right now with COVID-19 is completely different in terms of demand, right? Demand's low, but it's not because consumers don't have an appetite for demand or don't otherwise want to be out there in the workforce working, earning money, and then spending that money on goods and services. No, instead, consumers are actually being told by the government that they effectively can't. They have to stay in place. They have to stay at home, which with good reason they should be. So think about that. This is completely unprecedented. There is no other point in history where global governments have come out and literally started to slow down and shut down their economies on purpose. In fact, governments usually do the exact opposite of that. They're trying to increase economic activity and production in their given economies. But you're not seeing that. You're actually seeing governments shut down and put handcuffs on the economy these days. And that's totally, totally different. So again, the appetite for demand is there, right? Wouldn't you otherwise rather go out and do whatever it was you had planned today, or, go on that vacation, eat at that restaurant? I'm sure you would. And I'm pretty confident that once they sound the all clear, we're going to get out and be doing that stuff again. But don't take this lightly, because 70% of US GDP, that's a big number, 70%, is reliant on US consumer demand, meaning US consumers going out and consuming goods and services right here in our own backyard in the US economy. So look, the big risk we face right now is if we are on a lockdown for a much longer period of time than we expected, imagine months, or potentially if this becomes the new normal somehow, and this is years, that is a huge risk to the economy, and it could lead us to a depression. Now, I don't think that's very likely personally. A recession, I think that might be more likely. The first quarter is probably going to see a contraction in the numbers. And by the way, a recession is 2 back-to-back quarters with a contraction and growth. And we don't know this yet, but I'm pretty sure you'll probably see a contraction in the second quarter. I don't know. We'll see. So I think a recession is probably likely, but you don't know you're even in a recession until after it happens, because it's backwards looking. So here's some of my predictions of what lies ahead for us in the coming days, weeks, and months. First and foremost, and we can't take this lightly, there are going to be higher costs of human life. We're already seeing the death toll rising, and I think that is the worst part by far about all of this. We're going to have a tax on our medical system. We're already seeing that as well. And I think that's really what we ought to be the most worried about. We should be worried about those that are most at risk in our communities and our loved ones, and the medical professionals that are on the front lines. That's what we should be worried about. Everything else is kind of just noise, if you ask me. What else is going to happen in terms of the economy? Well, we're already seeing stories of people that are either being furloughed or not working or literally losing their jobs. I believe those jobs are not lost necessarily, because again, once they sound the all clear, I think everyone wants to get back to work. Everyone wants to get out there, start shopping, start dining, start going to events again. I think everyone would much rather be doing that today. But this is where we're at right now. There's a lot of strain on small businesses. People are concerned if small businesses will be able to stay afloat. Especially, I know a lot of you, our clients, are business owners. A lot of you are also in the entertainment industry here in Los Angeles. You can't really do any production work other than maybe post-production with a group of less than 10 people. That's really, really hard. So there are some serious challenges today to the current business economy as we know it. But this too shall pass. This is not going to be our permanent new normal. I saw an article today that said there's over 40 organizations and companies across the globe right now, very, very smart women and men, working on a cure and treatments, our science community, our health community, and I believe human ingenuity, we're going to get past this. I don't know when, I don't know how long it's going to take for us to find viable vaccines and treatments, but I do believe it's going to happen eventually. And another thing that I know is humans adapt. We are wired to survive. So no matter what the future holds, we're already seeing adaptations today by businesses and consumers. Look at all the people that are now doing online business or virtual business meetings and virtual learning and picking up items at stores rather than actually going into the store and shopping. So maybe this is actually going to create new businesses and new services that didn't even exist yet. I think there's a good chance of that, actually. I also think it's going to change profoundly the way that we interact inside of our economy. These things already existed, but I think you're just going to see more of it become prevalent and become the norm. That's just my opinion. I also happen to think that more than likely we will still see a very swift recovery. We had a really quick downturn. Remember, the market is future looking, and right now there's tons of uncertainty. If we can start solving some of this uncertainty, as they keep saying, the medical professionals, if we can flatten this curve and it doesn't impact as many people as we're otherwise concerned that it's going to, and if we could just get some good news, I think that drastically changes how we're perceiving our future, at least our near-term future, and that's going to be a big benefit for the economy and for the stock market. Now, I don't really know when, but if I had to take a guess, I really do think that by the end of this year, maybe a little longer, maybe 12 months, but I really do believe that we'll see a full recovery. It's going to happen pretty quickly. It's not going to surprise me if that happens. But look, don't take my word for it. Let's take a look at what some other really smart businessmen and investors are doing. I was reading a story about Mark Cuban, pretty successful guy, right? He was actually talking about how he recently added to some of his investment positions, specifically in social media, in online streaming services, and also ticketing for live events. I repeat, ticketing for live events. Those are things that we're not doing right now, live events, but he clearly thinks that we're going to be back out there doing these things sooner rather than later. Another smart investor, long-term investor, by the way, Warren Buffett. He's been doing what he added to Berkshire Hathaway not that long ago. Two of their most recent stocks they invested in. One is a large chain grocery store across the country, and the other is a biotech company. Now, you think about that for a second. I'm not going to be surprised if, a few months or even years from now, we look back at this and say, wow, all those investments actually make a lot of sense. We didn't see it right now because we're in total chaos, but when you see the forest through the trees, pretty clear to see that all of those companies are probably going to do just fine over the long term. And if anything, some of them are kind of benefiting right now. Now, look, I'm not saying that you should go ahead and start investing your money like Mark Cuban or Warren Buffett, or even like I or some of you have been, right? A lot of clients have been asking us about, investing money right now in the recovery. In fact, we're going to talk more about that in an upcoming episode. We're also going to talk about, what if you're living on your portfolio income? You need and rely on these distributions from your portfolio. You don't really want to sell things at a loss, but if you need to pay your bills, you need to pay your bills. So we're going to talk more about that in an upcoming episode. So look, if you found this interesting, if you learned something new, leave us a comment. I want to hear from you. Be sure to share this with your friends and your loved ones. They probably have some of the same questions and concerns that you do. And if there's questions that you have, if you're looking to answers to your financial questions and concerns, send them my way. Leave us a comment. Send me an email. I'd love to hear from you so we could feature one of your questions in an upcoming episode of The Smart Money Show. Until next time, I'm Stephen Rochelle, and I'm helping you get smart with money.